The next few days may look meagre for major US and Eurozone statistics, but there is still plenty out there with the potential to move markets and impact your trades. I'm Monica Gibson, and Alan McQuaid joins me now for the Dukascopy week ahead. Alan, given that the macro calendar is rather thin, another busy schedule of US Q3 corporate earnings will gain even more attention. In terms of sentiment though, what do you make of the suggestion markets have reverted to a dog biting its own tail syndrome?
Yeah, I think the markets at the moment are confused, Monica. I think you effectively got a situation where the blind is leading the blind, and there's little confidence in the direction of travel. Now, you could argue that Asia has benefited obviously from a weaker dollar, and that's obviously good for them. And the data this morning from China was probably better than people had expected, even though the figures are weaker than what we've seen in the past. But I do think the markets I think will remain unsettled until we get a better idea from the central bankers what they intend to do, particularly from the Federal Reserve. We have a meeting next week, which clearly is going to do nothing. But the big question is, will they give a more definitive signal on whether rates will be raised in December or not? My own gut feeling on markets is that I think the equity markets and risk on will probably finish the year stronger, but it's going to be an up and down final quarter, I'd imagine.
Indeed, it could be all about the ECB going forward. Some say the markets need another whatever it takes pledge, but even if we get it, there is a chance it could fall on deaf ears. Therefore, do you agree a rate cut cannot be ruled out?
Well, I wouldn't rule out a rate cut, but I mean, I think obviously we had comments last week from Governing Council member Novotny, who did suggest that more needs to be done. But I think clearly as well, I think his comments would suggest that he's not just talking about monetary policy. I think he's having an aim at fiscal policy as well, and I think that goes back to the whole debate of growth versus austerity and what needs to be done. My own view on this is that really, if if central banks or countries want inflation to pick up and economic activity to rise, it has to be done through fiscal policy rather than monetary policy. I think we need tax cuts, wage increases, etc., as opposed to more monetary easing. Okay, we may get another rate cut, but I'm not too sure that's going to have much of an impact. Now, I think the problem for Europe, or the Eurozone, is that Germany clearly wants to have a balanced budget and it doesn't want to go into the realms of more fiscal stimulus, but I do think that's the only way to go.
Today, Canada goes to the polls. Prime Minister Stephen Harper is caught in a tight race for his political survival. Do you think after a decade in power and amid the commodity rout which has roiled the country's economy, time might have run out for Harper? And are you expecting much of a knee-jerk reaction from the CAD?
Yeah, well, I think most recent polls have been suggesting that the most likely outcome is a centre-left Liberal minority government, and a lesser possibility that the Conservatives will get back into power. I think Liberal leader Justin Trudeau has pledged to run budget deficits to fund infrastructure spending, and that obviously would boost the certain stocks of engineering, construction, and equipment companies. But at the same time, a looser fiscal policy, should weigh negatively on government bonds and on the currency. So I think the knee-jerk reaction, if Trudeau were to get into power, I think you would see the dollar weaken, Having said that, I mean, I think looser fiscal policy would then, I think, diminish the chances of more rate easing from the Bank of Canada. They've already cut rates twice this year, so I think that's unlikely to happen again if we get more fiscal stimulus.
And lastly, Alan, what else do you think our viewers should keep an eye out for?
Well, I think obviously we should say data. There's not much out there, but I think at the end of the week we will have the Eurozone, the flash PMI data to see exactly where the economy is now, and we also have housing market data in the States, which will obviously feed into the Federal Reserve. I mean, the housing market is obviously one of the sectors that they'll be looking at. So we've got housing starts and home sales. So I think I'd expect better numbers for certain housing starts than in the previous month, and I think that may add to the view or keep those who think the rate hike is still on the cards happy. But I think we're going to need to see stronger economic numbers on a sustained basis for the next couple of months to see a Fed rate hike this year.
Alan, thank you. Well, viewers, also of importance today was the confirmation that growth in China slowed to the most in 7 years. Sinead McLaughlin looks at how the yuan is performing in light of the data in Monday's forecasts. So make sure you click back for that. Bye for now.